14 of 21 series are aligned with stagflation mild this morning. That is a moderately strong degree of systematic agreement across the macro complex. The current macro regime is stagflation mild, with a confirmation score of 14 out of 21. In this configuration, the macro regime reflects growth momentum decelerating at roughly -0.57, while inflation momentum accelerates around +0.01. The coherence score is measured as moderate, indicating that while not every series is synchronized, a clear majority point toward the same stagflation mild structure. By our framework's reckoning of comparable conditions, regimes with a confirmation score in this range persisted in roughly 41% of observed cases over 3-month stretches. Compared to last week, confirmation has held at 14 series, suggesting the alignment has neither collapsed nor surged, but continued to sit in that middle band. Historically, environments like this have felt choppy across markets, with sector-differentiated equity behavior and uneven bond performance in the sample we studied, a description of past behavior, not advice. On the yield side, the 10-year Treasury profile remains below the engine's 4.45% trigger, while the MOVE index sits near the 10th percentile of its 2-year range, tagged green when readings are in the bottom third of realized volatility and levels remain below key inflection bands. In our framework's reading of comparable periods, this roughly coincided with range-bound rate behavior and gradual repricing of inflation expectations within 1 to 2 quarters. An observation under our methodology, not a forecast. Labor data show unemployment nudging up to about 4.0%, with wage growth near 4.1%, a red momentum label defined as simultaneous softening in employment and firm hourly earnings relative to recent trends. In our framework's reading of comparable periods, this roughly coincided with pressure on profit margins and more selective equity leadership within 6 to 12 months. An observation under our methodology, not a forecast. Credit conditions have tightened as budget proposals and deficit concerns push Treasury yields higher and corporate spreads off their lows. The engine tags this as yellow, defined quantitatively as spreads widening from local troughs without yet breaching historical stress thresholds. In our framework's reading of comparable periods, this roughly coincided with more conservative issuance and higher dispersion in credit returns within the following quarter. An observation under our methodology, not a forecast. Across equities, sector rotation is defensive. Healthcare, utilities, real estate, and gold ETF up, while technology and industrials are down, and energy mixed. The engine marks this as red equity sector momentum, defined as outperformance of classic defensives against cyclical and growth sectors over a daily to weekly window. In our framework's reading of comparable periods, this roughly coincided with more persistent defensive leadership and uneven index performance within 1 to 3 months. An observation under our methodology, not a forecast. If the 10-year yield crosses 4.45% and holds for 5 consecutive sessions, in our framework's reading, the inflation composite showed clear acceleration in roughly 9 of 11 comparable conditions. A historical characterization, not a forecast. In that context, such a move would mathematically increase the case for a transition from expansion-style setups toward stronger acceleration dynamics inside the engine's regime map. If fear and greed drops below 15 and holds for 5 consecutive sessions, in our framework's reading, overall regime confirmation deteriorated in roughly 7 of 9 comparable conditions. A historical characterization, not a forecast. In that context, the engine would record more scattered series behavior, raising a regime watch flag rather than affirming the current configuration. The map is live. These conditions are being monitored daily across all 21 series. Atlas is the automated, rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as an upside-aligned or downside-aligned condition under the framework. A reading of how the 4 layers line up, not a trade. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols. The 4 layers do. Members use Atlas to study how the framework has recorded conditions across prior environments. As historical behavior, not as trade selection. Atlas runs the framework. You study the outputs and environment. You decide what to do next. May, potential, educational. All describe the framing. The math is contextual, not prescriptive. The morning brief is the public surface. The live Atlas dashboard shows the full 21 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.